The whole world of quant funds is built on this really powerful promise, right? The idea that you can use all this complex math and insane computing power to just crush the market. It's super alluring, super sophisticated, and today we're going to dive deep into one really fascinating case study, a fund called Yongyu Tianze. We're going to pick apart the anatomy of their perfect pitch.
Okay, so let's just jump right in with the number that's at the very heart of their pitch. This is a figure they pulled directly from their own marketing materials for a new strategy. And frankly, it's designed to be almost unbelievable. And no, you're not seeing things. That's not a typo. 98.2%. It's a number that's specifically designed to make you stop, to make you pay attention, and, to make you wonder if you've just found the golden ticket. So what's the deal here? Is this genius or just a massive red flag? That's really the central question for us today. And we're not just looking at one fund. We're learning a skill, how to peel back the layers of a perfect presentation to figure out what's really going on underneath.
All right, so first, let's just look at the story they're telling. Because on the surface, it is everything an investor could possibly want. You've got innovation, you've got explosive growth, and a team with a pedigree that is just impeccable. I mean, the speed here is just wow. They were founded in just 2021, and in less than 4 years, they're already managing hundreds of millions of RMB across more than 20 different products. And this whole rocket ship growth story, it's built on two really powerful pillars: the story of its elite founders and the promise of some incredibly advanced tech.
And that, right there, brings us to the heart of their appeal, the leadership. But as we're about to see, having star founders can be a real double-edged sword. And this table just lays it all out, right? On one side, under advantage analysis, you've got these incredible resumes. The CEO, Shang Renwei, he managed billions at a top European hedge fund. But then, look to the right, in the potential risk column. Can that experience in global markets really work in China's very unique, very specific A-share market? And maybe more importantly, could the CTO's super complex AI models just become these unexplainable black boxes that completely break when the market crashes? So here's the bottom line, right? When you put your money in this fund, you are not just betting on some diversified system or a deep team of analysts. Nope. You are placing a massive bet on these two founders and pretty much these two founders alone. That's a huge concentration of risk in just two people. Okay, let's switch gears and talk about their actual strategy and see how this all connects. Because driven by that insane growth we just saw, Yongyu Tianze is making a really radical change at what could be the absolute worst possible time. I mean, just look at this. They're basically going from a tortoise to a fighter jet overnight. They are tripling their portfolio turnover, jumping from slower strategies to super high-frequency T0, that's same-day trading. This is not just a little tweak. It's a completely new identity. Now, some analysts think this is a classic case of the scalability trap. You get so much money so fast that your old strategy just can't work anymore, and it forces you to take on way more risk. And here's the kicker. This is the real bombshell. At the exact same time that Chinese regulators are cracking down hard on high-frequency trading, this fund is pivoting directly into it. This is a massive, massive risk that, surprise, surprise, is not highlighted in their pitch deck, but it could completely upend their entire business. Okay, let's circle back to those performance claims, because this is where we really have to put on our skeptic hats. We need to look for what isn't being shown. And there it is again, the dazzling numbers. Remember, these are back-tested, meaning they're just simulated based on historical data. That 98.2% claim is for their North Exchange strategy, and as you can see, the others are also sky-high. These numbers are the bait. There's a name for this. It's a classic move called backtest seduction. And it works because of something psychologists call an anchoring bias. It's like once you see that 98% number, it's stuck in your head. It becomes your anchor, your expectation, even if you know it's not real. It just sets an impossibly high bar that real-world trading can almost never clear. Which brings us to probably the single most important question you could ask them. See, in early 2024, the Chinese market had what they called a quant crisis. A lot of funds just like this one suffered massive, catastrophic losses. It was a huge stress test. And yet, detailed performance data from that critical period is nowhere to be found in their materials. And when you actually stack them up against the competition, the story gets even weirder. So this compares them to some of the biggest players in the market, like Hantong or Minghuo. These guys manage 10 times the assets, and their real-world returns are in that 25 to 30% range. Yongyu Tianze, a much smaller, newer shop, is claiming returns that would put them at the very top of the list. Now, it's not impossible, but it definitely suggests their pretty numbers might be a little detached from the tough reality their peers are facing.
Okay, so after all that, what do you do? How you actually cut through all the noise and get to the truth? Well, it comes down to pushing the marketing stuff aside and starting to ask some very sharp, very specific questions. This right here, this is your toolkit. This is the crucial takeaway. These 6 questions are what you need for any fund pitch, not just this one. Don't just ask if they did well in 2024. Demand the daily data. Challenge every single assumption in their backtest. Ask about basis risk. That's a hidden cost that can kill returns. Question why on earth they're pivoting into a regulatory storm. And you have to probe that key person risk. These are the questions that pop the marketing bubble. And that's really what it all boils down to, isn't it? When you strip away all the dazzling numbers and the perfect resumes, this is the one question that's left. Are you investing in a repeatable process, a real system, or are you just investing in 2 people? A truly solid investment is a process that can outlive anyone. And understanding that difference, well, that's the key to making a smart decision.